Okay, so basically, Exploration Insights, we write an investment newsletter. So we only handle public equity. We just basically tell people what we're buying, what we're selling, what we're doing. Between me and my partner, Brent Cook, we basically have a lot of experience globally doing exploration, and now we're basically translated that to actually buying and selling stocks. What we do is just for our subscribers, but we like to do talks in terms of how we look at what's happening and how we look at our own investments. So this is one of those talks. So Ian asked me to look at Chile, and what's funny is that I think the last time I was in Chile actually working was 20 years ago. And if you even look at RCF's portfolio, not one of those companies is in Chile. Okay, I think that's important because what we're going to talk about here is that is Chile a priority exploration jurisdiction? But really my aim is to talk about the juniors, because what we're seeing is that trend that the exploration is being done by the juniors. And so if you shut the juniors out, you're going to cut out some of your exploration opportunities within your country. So let's start. So, okay, so again, focus on junior exploration companies. That'll be the first bit. Then I'll talk about the exploration trends. Then I'll compare Chile to your South American peers. And I mean South American, I don't mean Latin American, so I'm not going to put Mexico in here. So SWOT analysis, basically, of where Chile sits right now, summary and conclusions. So the focus on the junior companies. So, you know, we've had a long, protracted, let's say 3 to 4 years, where a downturn in the junior exploration side has basically given a big bad taste to a lot of people in junior exploration. But we've had a bit of a rebound in some commodities. That, coincident with reserve depletion in a lot of major companies, especially the golds, which I'll show you. And then we could see the exploration budget cuts that Martin talked about. Some of my slides will actually be quite similar. And then we'll say some of what the majors are trying to do as a proxy for exploration is actually do JVs and earn-ins with the juniors. So you got to think, if you don't allow access to the juniors, some of these majors might not put a foothold in here. The juniors right now are better funded to provide catalysts, like to drill. Employ your ALSs outside, your drillers outside, your helicopter companies, whatever. They've got more money now. And the market right now is watching junior companies. So one commodity. I could put zinc up here as well, but you know, we've seen a big increase in some of these commodities, and copper obviously is very important to Chile. And if we switch to gold for a second, we can see that, like when I worked for a gold company, it was all about volume. It was all about never letting your reserves down. Don't ever sell production. But now they've got no problem with this. Because, I mean, in the end, with the gold price where it is, it hasn't moved up like copper or zinc. And Barrick has said this, and we know it. 60 to 70% of their assets actually make money at their reserve price, which is $1,000 gold. And so what's happening is that they're declining, and the investors aren't as panicked about this because they're not as much about volume as about the generation of free cash flow, which is something the gold industry never really thought much about. When I worked for Phelps Dodge, it was lower quartile costs, same as RTZ, and it was safety. When I moved to a gold company, it was all about volume, ounces. And so it's similar to Martin's graphic, but this is specifically for a company, Barrick. And kudos to Barrick. I used them because they had all of their annual reports back about 20 years, 30 years. So I just went and said, okay, as a proportion of your revenue, how much do you reinvest in exploration? And how much do you spend on G&A? So if you look at G&A, it peaked around here, and it's been declining, and well done for them. And then we added this guy. And then it peaked again. But if you look at exploration expenditures, even though we're going peak to trough, the general trend's the same, down as a proportion. So some years you were at 7 to 8% of your revenue. And this is not absolute, it's relative. Okay, it doesn't matter how much absolutely you spend, but how much are you willing to reinvest. They're obviously willing to reinvest less. The Andes program that found Altura started about this level. So going forward, what's this going to do? But right now, it seems like they're pretty comfortable having G&A equal exploration. And I'm just using Barrick as a proxy. I don't think that they're unusual. And so what are they doing instead? So this is mostly gold companies because that tends to be our focus. But we see a lot happening with South 32 and some of the base metal companies. So this is what they're doing right now. They're funding juniors. And the way they're funding juniors is through either passive investments. So like Agnico or Goldcorp, they'll do a lot of little investments. And that's not unusual. I used to do that at Newmont before. But now Newmont and potentially Barrick as well are taking more of an active approach. So not only do they do potentially a little equity, but they'll take a big role in advancing that asset. But now they're not buying the asset. They don't want to take the risk of paying too much. They don't want to take the risk of failure. They'd like to put a little bit of money, not the $2 or $3 billion in acquisition, but a couple of $100 million, figure it out, and then go forward, which is a much better way of doing it. And right now, they really, like, when I see exploration in the majors, I see a lot of capacity in the juniors that actually exceed the majors in terms of their knowledge of the local community where they work, of how to actually get land, and basically the majors have taken a step back. So now they want you to get the land package. They want you to figure out where the best stuff is, and once they send their high senior people to look at it, then they'll take a stake. And it may be active or it may be passive. And this is another way that junior companies are more active. It's like, this is the TSX. So a lot of the mining activity globally is funded through Canada. Doesn't matter where they operate, it's funded through Canada. So the major exchange, the main board, the TSX, like you can see there's been a drop year to date, and that's to the end of July, I think. So a 14% drop. So it's not the majors that are getting money, it's the juniors. It's not absolute terms, it's not a lot, but that's where it's going. And if anybody knows about the Precious Metal Summit at Beaver Creek, one of the biggest increases in delegates has been corporate development. There's been a 40% increase in the number of delegates of corporate development that actually go to Beaver Creek. It's less institutional investors, though that's the biggest proportion of people that go, but growing corporate development. You'll get juniors going to those conferences with 13 to 14 meetings back to back. And sometimes I'll meet gold companies with about 13 people standing on the other side of 2 people on the junior side. They're really interested. And so this is the return you can get. So Martine put out a slide about a double. This is really what reality is. You can get a 700% return in about 7 months from these stocks. That's the market. So what I did was a peak to peak, and this is only over the last couple of years as explorations come back. So the average return is about 260% over 2 months. Peak up to 680% for a company that actually has not even drilled a hole. Good or bad? That's where we're at right now. So, and you can get these returns from 1 week to 7 months. Average market cap of these companies is about 150 million Canadian. But this guy here is almost $1 billion. And he's the guy that hasn't drilled a hole. Okay, predominantly gold, but base metals as well. And here's the important thing for the Chileno, anybody from the government here. Half are from stable jurisdictions. So the majors want the exposure to exploration because they don't have anything. But they also are really keen on this. 4 from Latin America, but none from Chile. Exploration trends. Oops, sorry. Okay, so it's similar to Martine's graph. What we're talking about is an increase in overall exploration. This is gold. You'll see this flat It was always like this. It was a bad time. Then 2 jumps of about 40% per year, compound annual growth rate. 15-year cycle was about 16% over 3 cycles. Say that's a cycle, that's a cycle, that's a cycle. But since that peak where we overspent and didn't really find anything, we've had a 4-year drop of about 20% a year. That's gold. But importantly, as to Martine's slide as well, is that this has been happening a long time. And our focus right now is on grassroots discoveries because companies don't have, their reserves are declining and they don't have quality assets. That's really the problem. So this has been declining since about 2003. That's the proportion of grassroots exploration of that total funding. That's the green bar. That's been declining. So even though they're spending more money, they're spending less on grassroots. Most of it's going for brownfields. Because for a big company, that's less risk. But the potential to find a Yanacocha is not going to happen if it goes in this direction. Copper's similar, but copper seems to have flatlined around here in terms of grassroots. But you can see the same cycles. 11%, but copper's much more volatile. 80% here and 60% here in terms of exploration expenditure increases. But the same 20% drop. Chile. Okay, Chile managed to do a little bit better in terms of the drop. But you can see the same cycle here. Flat, pump, pump. This is the proportion of copper. So copper can go from anywhere from 65 to about 80% of your total exploration budget that's spent in Chile. But gold has a big range as well, 20 to 32%. And you can see gold is sort of lying right here around 20%. So let's compare Chile to everybody else. So this is the big thing that everybody's worried about in Chile, or likes with the government in terms of investment, is like there's been a drop in exploration. But really, the drop in exploration is not as pronounced as everybody else. It's okay. Everybody, like if you benchmark it, it's the same. Peru peaked and Peru's down. Okay? So you're fine. But here's the problem. Going forward, the perception of Chile is negative. It's gone down. And now if you see from Martine's slide, I think out of the 6 or 8 companies, 4 of them are in Peru. And a company with an office in Santiago would prefer to have an asset in Argentina. Okay, so this is really the issue about the jurisdictional issue. Okay, so now let's look at a SWOT analysis. And what I put a bit of a preemptor here is that as I've not been in Chile for a long time, I've actually gathered a lot of information from heads of major mining companies, consultants, junior companies that are looking at developing. And so a lot of this is their comments, but the conclusions are my own. Okay, so this is from control risks. So I did this in Colombia as well. So what I wanted to show is that Chile is very anomalous in South America with respect to stability politically, although some might argue, operationally, less risky, security, less risky, terrorism, less risky. So that is very anomalous in South America. That's something that Chile should leverage. Because as I showed you before, with respect to the investments by the majors, they want the stable jurisdictions. And if Chile doesn't leverage this, they'll miss out on the party. And more people will go to Mexico and places like that than come to Chile. Even though Mexico's obviously got a lot more security risk than Chile. So your big advantage is you're much less corrupt. Like I lived in Argentina for 7 years, so I know what corrupt is. So you got to take advantage of this. And then also, another huge advantage is, as you've gone through all the geology talks, and people know this probably better than I do, but it's still very prospective, and you're still finding things. It's difficult, but it's not the geology that's hurting you. So you can find things. But it's a major that's finding things, not a junior. And then this is important. I mean, for whatever you think of the Fraser Institute that's done out of British Columbia and Vancouver, the perception of your policies, if everybody's geology is the same, what do I think about you? I think less of you now. Threat. Doing business is not the best. Now you have countries like Colombia and Peru that are actually exceeding you. These sort of headlines don't help. And I'm coming from the outside in. I don't know the ramifications of this. I don't know the politics behind this. It doesn't matter to me. When I see something like this, that's a negative. And this is another thing. So at CESCO in April, somebody from the Executive Secretary of the National Productivity Commission, he's admitting that there's lots of red tape. And he's also telling us that our exploration numbers are not in line with our production. So I don't really need to say anything. And so here's one of the biggest weaknesses. So I got this right out of their website. In terms of exploitation licenses and exploration licenses, it appears that the majority of the ground is staked. There's hardly any turnover. There's no data from prior exploration. Option deals can kill a junior company. And so this is a serious impediment to any generative program, but specifically to juniors. And so here's an example of an access to easier jurisdiction. I mean, the Mount Isa Inlier I've worked in, and it's obviously doesn't have the mineral endowment of Chile, but it's an important jurisdiction or a repository within Australia, especially Queensland. And so here, anomalously, a junior company with a market cap of 7 million Australian can have one of the biggest land packages in the Mount Isa Inlier. Why? Because the majors don't care about exploration. So Glencore basically is forced to give up their land. Chinalco doesn't do exploration. They've been forced to give up their land. So somebody countercyclically has slowly been grabbing all the land. That's not going to happen in Chile. The other thing is that public data, I mean, like in Australia and a lot of places, that public data that people do, after a while, it's got to be public. People shouldn't have to do mag surveys over again. They shouldn't have to re-drill a hole. If the information is there, they should give that information up. The country should demand it and do it fast. Because if you want the investment in exploration, they'll go somewhere else. And so, as an example, I don't want to key in on Australia too much, but so here's a government, a state government in South Australia that actually goes out of their way to tell you, hey, I've got geophysical data. Hey, I've got geochemical databases. What do you need? And obviously, South Australia, I don't think, is as prospective as Chile. Okay, so this is, when I was a market analyst for Phelps Dodge, one of the biggest constraints we saw in copper was, the issues in Chile with power and water. And so I came in here thinking it was still a big, huge issue. And so this is an outside perception. But from what I've seen, and I was just up in Calama looking at your wind power, that's changing. Chile's done an excellent job. When the Argentines cut off the natural gas, they knew that they had to do something else, and now they've gone big on renewable. They're actually exporting renewables. So this is something that's got to get out as well for people. And water's going to be a bigger issue. So as geologically we'll have less solvent extraction, electric winning, because we'll have less oxidation, and Cerro Verdes now, all the former SXEWs now are concentrates, and so concentrates consume more water. And so from the University of Chile during their talk, I think this was at CESCO, so basically they're flatlining terrestrial sources of water and saying that the potential is for desalinization plants to take up all the slack. I don't believe that. But, I mean, this is one potential source. The issue is with these desalinization plants, you're going to need more power. So, summary and conclusions. Okay, exploration right now is back in favor with commodity price rebound, but we think it's predominantly driven by junior companies right now. Producers have declining reserves and have left exploration unfunded, and there's no great return to actually funding exploration through internally, corporately. Producers are seeking exposure to exploration, preferably in stable jurisdictions, via junior companies. So this should make exploration in Chile like a priority for these companies, but if you don't make it easy, it's not going to be. Chile's safe, secure, social license to operate issues and permitting delays are increasing, according to my sources, so that's got to be an issue that's got to be resolved. And especially for juniors, I'd say the lack of public geological databases and the inability to consolidate land is a big issue for the juniors. So in conclusion, strengths, remaining endowment combined with low geopolitical risk is a huge advantage for Chile. Infrastructure issues are weakness, but resolvable. Policies need to be reviewed. Issues that impact exploration, permitting, public data, and concessions. If Chile can get its act together, I think it'd put itself back on a path to becoming a priority jurisdiction for exploration. That's it. Thank you.